GKFX Prime presents the Market Analysis Webinar.
Hello everybody, welcome to another edition of this weekly webinar where we're going to cover some of the major Forex, commodity, index and crypto pairs. If you are interested in training anything else, please drop us a comment, let us know, we'll make sure to cover it. And if there are any extra questions you had, again, please drop a comment. And if you're just enjoying the video and get some benefit out of it, please click that like button. It really does help us. So without further ado, let me get right into it. Let's start with the euro. Okay, so this looks a little bit complicated on the 4-hour chart, but here's our daily setup. Basically, this is how we had been drawing things. So we'd been in an uptrend, we had a rising trend line, we broke below it. Okay, that was a bearish sign because we had broken below the 50-day moving average as well. But in the broader context of things, obviously things were moving up. So we got a rebound. This was an opportunity for the price to roll over again. But in the course of getting that high, we actually broke above this downsloping momentum trend line through the RSI, and that told us that actually the momentum pushing higher, likely price is pushing higher too. And actually when we look at this downsloping trend line, you can see that price has kind of shifted out of this kind of down mode and is increasingly getting stronger, and actually we're above the 50-day moving average now as well, you can see. So first line of support to this new bout of strength is the 50-day moving average and this previous peak, and 118 pretty much all neatly comes in there, and you can see that's the support as of today. We may not get much lower than there because it looks like momentum starting to pick up. One reason we might, if we believe the uptrend is getting more momentum, one reason to think, you can see, oh yeah, already as of today we've pretty much challenged this 118 a couple of times, seem to be pushing higher from it, but excuse me, but we were overbought over here, and so we've come off the overbought level already to some extent. But if we're going to come off it a bit more, then maybe we can even drop down to these previous two peaks down here at 117.80. That gives us a little 20 more pips to the downside. Where are we wrong on this idea of momentum pushing to the top side? Pretty much these lows down here. If we give way, take out the lower lows, the short-term moving average will be the first clue, and then take out those lows, and we pretty much know that this was actually a false break to the top side and the price is turning lower again. But for the time being, if we remember our bigger picture, we're slamming into this long-term resistance. So naturally there was going to be some sort of pullback in that area. There was, but we did actually break above it. You remember, this was a weekly close. We pulled back down afterwards. Now we seem to be giving it another go to break up through 119, and if we do, pretty much get up towards 125. Would be the logical upside target if this consolidation breaks higher. So for the time being, thinking that perhaps even though we had a big rally last week, in the last few days, maybe we might still see some further upside here. If we can just cling on to these old highs, we might be up to challenge 119 in not too long. So worth noting here on our daily chart that our call for bullish divergence has panned out pretty well. We're above 130 now. We're also above the 50-day moving average on the sterling, or we're sitting right on it now. I think we were above it. You can see that the 50-day moving average and 130 were resistance, and so now we'd want to see them as support. So you can see the price turning lower a bit here. Maybe we can stall out at 130. If we don't get, price drops below 130, it's not the end of the world on an intraday basis, and it might give us a better entry point down towards 129.70. You can see that throughout this whole latest phase, the 50-period moving average has been working quite neatly as support. We've not even had a single close below it on a 4-hourly basis. So if we were to get that, that would probably be my clue that actually this upside momentum is fading. And you can see the euro and the pound are moving up together, and so if they move down in concert, or one starts to really pull back, and you're long the other one, it would give you pause for thought. Here's our dollar yen, and you can see that this downsloping trend lines work very neatly. We put it in one of our daily notes alongside this alternative, where we said that the price has kind of moved into this kind of resistance zone, and it has sold off from the top of that zone. And you can see here that we're actually in a very almost perfectly horizontal downsloping parallel channel. Now, obviously, a test of the bottom of the channel would be a very nice trade. We're kind of clinging on to 105.50, having topped out at 106. The bottom of the channel, depending on how quickly you get there, is down around 102. That would be nice, but it's not altogether clear cut that dollar yen sells off just because pound dollar and euro dollar are rallying. Actually, the dollar is losing out because it's a haven, and the yen is also a haven. So we could be on the cusp of a break to the top side. If that is the case, we've already just tested this bit of support, and you can see some buying going on from the support. If we get a close for this period above the previous period, that would be a two matching lows and a higher close bullish pattern. Look out for that possibility. If we just kind of close in the middle of the bar and then eventually break below these two matching lows, that's a bearish opportunity, and we could quickly drop down to this spike low, or down to 104 and the bottom of the channel, as I mentioned. Aussie dollar, similar situation to the euro. We're challenging this downsloping trend line here through the highs. So yeah, pretty much just testing it as we speak. We've had 3 days on the trot of gains. Not to say we can't have a fourth, but it would give us a better entry point if we were able to anticipate a break above this declining trend line with a dip down to 0.72. Not sure if we can really expect anything better than that, but the 50-day moving average not been working as such a clear-cut support, but given the fact that we've been below it a couple of times, just another test of it wouldn't be too outrageous. Correspond with these two highs here that would come in here around 71.70. That could make sense, but if this trend line is going to break, we could have a dip first and then breaks on the second go. Or equally, while some of these other trend lines on the other currency pairs have broken already, suggesting upside, maybe the fact that this Aussie pair hasn't broken tells us actually the price is about to roll over again to the downside. I don't think so. I mean, this looked like a kind of double top in the price here. That was a big bearish pattern, big bearish engulfing from a round number, from a kind of known previous support. That could have been a bearish setup, but it wasn't. We rallied up and broke through it. When you get a big bearish pattern and then you just go straight above it, that to me is bullish. Okay, let's switch gears to commodities. So now let's have a look at gold, and again it's all looking pretty familiar, right? We've basically been in a period of consolidation for for risky assets. We had that really big month for the dollar in September, but now we're almost midway through October and we're getting a breakout in risky assets. And so using this top trend line, we've already broken out. Actually, probably the slightly better trend line is this one through here. There's kind of various combinations of it, in which case we're basically challenging the top of this triangle. But it does look like to me like we tried to break lower. 4 days in a trot we tried to break lower, we couldn't do it, and you can see that in terms of momentum we're getting a push to the top side, which I think is preempting a break of this trend line here and preempting a break of above the 50-day moving average. And if that's the case, then you just would sort of expect that we're basically at least in a horizontal range, and you'd want to come and test the top of the range, which I guess is a sort of combination of this peak and this peak with 2000 in the middle. So retest of 2000 potentially on the cards here. And you can see that we made a lower low, then we made a higher low. So basically this higher low, if we drop back through that again, come back down to the bottom of the range, then this whole idea that we're pushing to the top side could still be true, but it just won't be true in the short term. If we got a drop down to 1900, which fits in with the 50-day moving average, that'd be good. But the 50 days not been working really at all in gold, and you can see this range of highs through here. If, like in these other assets, we actually don't get too much of a pullback, then that's probably as far as we can expect to go. This was the original peak. These are the two false breaks. So I'd look for a retest of the original peak, which pretty much won 1916. If we fall through that, then maybe 19 is your next option in terms of trying to trade this break to the top side. Next we've got WTI, less clean cut market. This is our daily chart. It's still pretty much sideways. But what is good is that we've had two big bearish moves this week and then the first half of last week, both of which have failed. And we had a decent run up the second half of last week, and in the end, I believe this is WTI that I've got on the chart, but Brent, I believe, closed the week 9% higher. So it was really good, healthy move higher in oil prices by the end of it last week. That was partly because of this strike in Norway. That's finished now, so there shouldn't be any more supply disruption. So hence we're closed lower on Friday, and we're potentially going to close lower again today. I wouldn't really want to trade this in the middle of the trading range, but if we're trading oil like we're trading these other risky assets, then we're actually expecting a break to the top side first of these highs, and then potentially of these highs through here, and actually maybe even get above 45 in WTI. Next we've got Bitcoin, and we've got a potential breakaway gap here. So we've obviously been consolidating for a while, and we've made a big push higher as of the end of last week. If it is a breakaway gap, it pretty much means we're not going to get back below and try and fill the gap. So that would suggest that what 11,216, as I have it on this chart, that would suggest that is support. This is just a rule of thumb, doesn't have to be true. If not, 11,090, pretty much 11,100 is the previous resistance that we just broke away from. But this is sort of in terms of gaps, the ones to look out for, the kind of breakaway gaps and the exhaustion gaps. We're not exhausted from any kind of trend here. It looks like we're accelerating into a new trend. That would be the breakaway gap, and it kind of fits in with the general scenario. We've pulled back, put in a base in terms of momentum, same as price, and we're pushing out of it. And to me, like these other risky assets, Bitcoin, if you count it as a risky asset, which is the way it's been trading, obviously it's denominated in dollars too, then it looks like we're pushing high. We're going to re-challenge 12k, potentially beyond. Right, that is it. Thank you very much for watching, everyone. Good luck trading this week, and if you do get some benefit from these videos, make sure to subscribe to the channel, and then you won't miss next week's. Thanks, everyone.